Apple announced a 4-to-1 stock split, and shortly afterwards, the shares of the iPhone maker surged more than 80% in the past year. So what does it mean for stock investors? In this episode, I will provide some useful insight about what to expect, so don't go away. Welcome to my channel. Please subscribe and thanks. What is stock split? It is a business or corporate decision and action to divide its existing shares into multiple shares to boost the liquidity of the shares and to increase the number of outstanding shares, meaning more shares for prospective investors to buy. So, what is the effect of the split? The number of shares owned by shareholder would increase. However, the total value of shares remain the same because the split does not add any additional dollar amount to the stock. Though the split may not add any value, yet it is an effective strategy by company's management to increase their cash position. So what does it mean for investors? According to Apple, the stock split would appeal to a broader base investors and will enable new and more investors to buy, particularly those who are unable to buy Apple shares because of the high price. And for existing owners of Apple shares at $425, as at the time of this presentation, they will receive 3 additional shares for every 1 share they own. It means the stock price will be divided by 4, making it $106 per share. It is worth to mention that this is the 5th stock split in the history of Apple. Apple last split was in 2014 by 7-to-1 when the share price reached about $700. Apple CEO Tim Cook in 2014 said, quote, "We are taking this action to make Apple stock more accessible to a larger number of investors," end quote. Again, companies will also engage in stock split to encourage traders to trade in options. Why? Because to trade option, say cover call, for instance, investors need to own 100 shares or more in their portfolio. In effect, the Apple stock split means Apple stock price is reduced. Hence, investors can now buy 100 or more of Apple stocks to trade options effectively. Meanwhile, to be a beneficiary of the split, you should own the stock before August 24th, 2020. Otherwise, you can wait and buy it after the split. Is Apple stock a buy? Well, let's look at some basic data. While Apple is still regarded as a growth stock, yet it pays a good dividend at annual payment of $3.28, a dividend yield of 0.77% with a payout ratio of 25.55%. What does it mean? Well, it means Apple still have plenty of room to grow. And a look at the dividend history also confirms a steady and consistent dividend payment. Now, let's look at Apple through the lens of technical analysis. The stock nosedive between March to April 2020 during the market crash. As you can see, the 50 moving average crossed the 20 moving average in the downward trend. However, by May 2020, the market turned bullish again when the 20 moving average crossed over the 50 moving average in the upward trend. And since then, Apple continues in the upward trend till date. Looking closely at the chart, I can see the price movement going 90 degrees or parabolic if you like. However, if this parabolic trend continues, we should expect a pullback because stock price moves in impulsive and corrective pattern. Is this a bad thing for Apple? No. However, time for investors to add more shares before the upward trend continues again. Okay, what about Apple financial position? Again, in my view, it is very healthy. Look at the total net sales in 2019 at over $64 billion. Again, look at the 12-month performance at the gross margin at over 98 billion. Again, let's jump to the net sale profitable segment. All the numbers are on the increase from America, Europe to China, despite the trade war between America and China and the rest of Asia. Look at the total net sales, say at $64 billion. And looking at the net sales by category, iPhone, Mac and iPad sales are also on the increase, perhaps because of the lockdown. Again, Apple is not slowing down. Soon, we shall see a new Apple phone in the market. Let's look at the liability, like debt at $91 billion. Can they pay? Yes. Because they are already servicing or paying back some of their debt. And at the cash flow for 12 months, you see that it's at $69 billion. And again, Apple is also doing buyback of their stocks. That said, is Apple a buy? Definitely, in my opinion. It is, however, very important for you to do your research. Okay, here comes the best part. Subscribe. And are you going to buy now or after the split? Please comment below. Remember, the goal is to generate wealth, build companies and create jobs. Bye now and see you soon.